Hey, Steve, Andy, what's going on?
Hello, thank you, Scott. Hello, Andy.
Hello, Scott. Hello, Steve. Hi, everyone.
Hey, everyone. All right, welcome to Trade of the Week. I think I'm going to make it. I had this weird tickle just show up in my chest here a minute ago, but I think it's gone, so we should be able to get through. Welcome to the Trade of the Week afternoon webinar. I got my questions panel up. Andy will monitor the questions panel if need be. So first slide, Trade of the Week disclaimer, just a reminder, we are a software as a subscription service company. We are nothing to do with financial advice. We're not brokers or RIAs. So anything you see or hear is content related. It's not to be construed as investment advice for sure. So if you need that, you got to seek out the right people. All right, we provide a vibrant community of traders and a lot of access to our guys in our education group, starting with that slide you see there of Barry. He's live on his desktop Monday through Friday, the bell to bell, and it's a free service. We call it the live trading room. About 500 people a day show up in there. A handful of really good traders kind of set the pace and set the tone, but Barry does a great job showing the Trade Ideas product, using it, answering questions, and again, helping people get up to speed, whether they're a new user or yet to subscribe. And then, of course, we have the Monday through Thursday webinars, the afternoon webinars, always starting at 5 o'clock Eastern, like we are right now. Different themes throughout the week. And Friday, we have no afternoon webinars, but what we have is a 3-hour open forum to come on in this exact same environment here, GoToWebinar, question box, demonstrate live on the desktop questions and answers and solutions. So that's 11 to 2 Eastern every Friday. However, this Friday we are not going to be available. Public service announcement, we're having our annual Trade Ideas annual meeting, and since most people in this company work from home across the country and in Canada, we only get a chance to get together every now and then. So everybody's flying in this Thursday and Friday. So we're not going to have a Friday support session this week, but normally we do. In the TI University, that is a Monday through Friday morning class. Well, it's actually 12 Eastern to 1:30 Eastern, but we start off on Mondays and beginners, and through Thursday finish in advanced format, and then start over again the following Monday. So that's a recurring live session. Monday through Thursday, we do have a recorded version of that as well. But like I said, it just resets every Monday and gives everybody a chance to file in and get a nice 4-day education of a lot of good stuff that we have to offer. So all these things together really help provide a nice concierge service to a very in-depth program called Trade Ideas. It's been around since 2003, and there's many layers and many ways to approach it. So it's not something you learn overnight, and we recognize that, but everything that just showed you, is a pretty good way of connecting to you all to get the education and the information that you need. All right, as usual, the theme, a brave new world is coming, guys. This is the world we're kind of going to be coming into, AI and human beings working together to take out a lot of the difficult, mundane sifting of data. And that, is par for the course, works right into the Trade Ideas technology when you consider our AI and you consider our technology in general, just bringing together a nice curated list of items from which you, the human being, can turn around. We've talked about it's being used in the medical field, it's being used in the gaming field, the football virtual fantasy football is starting to use AI now. It's just a great way to compile intense data and give us a curated list of what we're looking for. So man and machine combined, great, what's the word I'm looking for? Saying. All right, so today's agenda, the 15th of January, we'll do kind of normal market recap, interesting stuff shaping up out there. A very quiet day for Holly, and that is speaks volumes in itself. And you have some thoughts on that, and so do I. Trade of the week this week is along NVIDIA. Check in with last week's one that's hanging in there as well, ex-US Steel. And then since these last two picks were coming from the Let's Go Fishing, I thought it'd be a good time to review Let's Go Fishing and also the trend change lubricant settings that are poised for this type of market, and I'll show you what I mean when we get to that point. And then some more sector glances and possible short chart requests if we have time permitting. All right, so let's get right into it here. Let's see. All right, looks like we're caught up on the questions. I'm going to go right to S&P. I got my tool back. Lost my pen yesterday, but I got it back. This market is very constructive. It's not out of the woods yet. It's been climbing higher on declining volume. But what I talked about yesterday and what we discussed last week as well was the respective pivot lines that all of these averages are running into. I concern myself with moving averages and pivot lines, and that's really about it for the way I try to keep it simple. But I think what we've got here is, again, a very constructive look. You weren't in yesterday's webinar, Andy, but maybe you recall, we've talked about it, but back in '98, in the fall of '98, we had a violent sell-off, and we had a real big bottom. And I remember that bottom. It always imprinted on me 20 years ago, 21 years ago, rolled over, and then it dug in, and then it just grinded higher. Do you remember that setup when you first started trading?
Yeah, it doesn't stick out to me as much as you do. I do kind of, because that's about when we started.
Yeah, right. Yeah. So this could have the same significance because, I mean, we hit 20% bear market territory down here. It was 20% bear market. That's a horrible 20. And is a 10% correction. Well, we got a full 20% correction on a market that really needed it, if you ask my opinion. And so the reason I'm bringing all that up is that this may have satisfied the need for a market shower, for lack of a better word. We just are now at the inflection point where the rubber meets the road here, and we're going to find out real soon, I'm pretty sure, what exactly we're going to have coming forward. So what I mean by that is, again, constructively, a failure to roll over here, like it was in '98 after a big sell-off and a violent V-bottom in '98, and we grinded higher back then. Could be what we're doing now. I don't know, but so far we're on the path to say, yeah, we're doing that. The moving averages have crossed back up. The 10 has crossed back above the 20, and the 20 and 10 are now supporting the price, which is going sideways. That's kind of a neutral opinion for me right now. There's no real bullish nor bearish sentiment on that. But what's of most interest is, I'm going to look at a couple here. First off is the SPY. What I said yesterday and even last week was that we could hit this orange line, which I had in place for the last 10, 20 days, looking at a possible level at which the price action could stall out, and it certainly did. But it did so in a very bullish fashion. Sideways action underneath a resistance level is very constructive. If you think about that versus pushing through and then closing lower and then pulling back in price, no, this is very constructive, running up and butting up underneath the resistance and moving sideways. Well, in each iteration of our ETFs, I've drawn respective pivot lines. And so when we go to the Qs have been leading us on this whole move higher. The NASDAQ, notice they closed above their pivot line last week and have remained 5 or 6 days above that. That's extremely constructive. What the NASDAQ Qs are now looking at is that, in my opinion, possibly one of the last lines of defense here, this declining 50-day moving average. And honestly, if you want to be a nitpicker, it closed above it today. So that's rather constructive. The NASDAQ was leading us on the way down, and for the moment, it's leading us on the way up when we look, again, at these respective pivot lines. So if I go back to the SPY, well, guess what? We did close above this pivot line today in the S&P 500. So chalk that up for the good side, the constructive bullish side. We go over to the IWM, and it's been grinding at this line, its line, a pivot, for a while now. But again, closed back above it today and very much underneath this declining moving average here. And then lastly, the Dow is the lagger. It's the only one that hasn't climbed back through its pivot line and closed above it, but it looks like it wants to. So when we go back to the leadership, what we got here is the Q saying, come on, guys, follow me. I'll show you the way, and it's doing it. So until that changes, we're on a kind of a constructive move here. The only thing I don't like is the declining volume. I don't really care for that. But what would I like to see going forward to start saying that we're no longer where the rubber meets the road, that maybe we've found, some sort of resolution to work out? Well, I would key off of the S&P 500, and I would like to see that S&P 500 post a few closes above this 50-day moving average. And then, I don't know, I might be logging back into my 401k, Andy, and rebalancing a few things in the favor of stocks. We'll see. But I'm not saying it's bullish nor bearish. We're still in kind of a real wait-and-see holding pattern. But that being said, everything that I am seeing has been very constructive in each respective ETF. So is that kind of what you're seeing, or does that make sense, Mr. Andy?
Yeah, I am. I really believe. I think we have another big hurdle, because if you pull that horizontal line up for me to where the 50 period moving average is, you're going to see a lot of bodies right there.
Right there.
Yeah. That to me is much more bigger resistance than the two little wicks down.
Okay.
I mean, I understand those.
Yeah, I was going off the lows just to explain to everybody.
Those are price points, and they need to be paid attention to, and because that theoretically those are the lows of those candles. But
this is our bogey.
Yes, that is our bogey with the spiders. Now, you made a good point. The Qs are kind of leading the way, and they closed today above their 50-period moving average. I just think there's a lot more work to be done to prove to me. By the way, where's the trend? We should be getting close to a trend line on the Qs if we're not there right now. Looks like we're sitting right at that trend. I know the spies are a ways from theirs, but let's see how that looks. The naked eye looks pretty close.
Naked
eye.
It's getting there. Getting pretty close.
Mm-hmm.
So look at it. So a confluence of not only the 50-day moving average, but the declining minor trend line.
Mm-hmm.
Interesting.
So yeah, it is earnings season, but I know me and you, we look at candlesticks and not earning reports. That's for sure.
Mm-hmm.
But
I've got something to say on that.
That will definitely kind of help with the enthusiasm in the early morning if you do have good earnings. But we're far from out of the woods, I think. We're
at a crossroads, in my opinion.
We're definitely at a crossroads, and definitely not bullish at this point, but let's see what happens.
No reason to be either, yeah. Well, all right, Sounds good. So let's put this guy back up here. And before I hand it over to Andy for Holly, what I noticed a few things on the Holly. The bigger picture is always important to me. The trade count was extremely low this morning.
Mm-hmm.
It was 2 hours into the day, and there was just a handful of, you could count them on two hands maybe. There also was zero directional bias. We had equal amount of shorts and equal amount of longs. We had bifurcation. It was on a move. Like when I go to spiders here, these are the kind of days where I would expect to see some risk on for the most of the day, where things are just trending higher. But it was foolish. It was fooling us. The S&P and the Nasdaq and the indexes were having a nice broad-based rally, but I didn't see much of individual names doing the same. And before I hand it over to you, Andy, the big thing was that risk off was the order of the day. All three segments were in risk off for at least 4 hours, signifying that quick hits were the way to go. Get in, get out, because the actual price action of these stocks that were triggering were indeed very choppy. They were not following the broad-based expected risk on. I would have expected to see risk on, but whole point being, a lot of things not falling into place: directional bias, risk on, and trade count. So with that, if you want to take it over and talk some more.
Yes, very good point. Let me do that. Let me grab it here. All right, see it?
Yes.
All right. Well, yeah, and I'm glad you brought that up, because Steve and I were noticing, let's take a look at the spiders, see what we have first. Always kind of like to do that. Well, we had immediate jump with the big old first 15-minute green candle there. And then it's kind of some sideways action followed by a move higher. I'm not sure what this was, but you can see it just bounced right back, got close to highs. Makes tougher trading when you get action like that for anybody, but I thought it, funny. Me and Steve says it's like, wow, man, this market's moving, but I'm not seeing a lot of things ripping up. And I also noticed that if you look, this is for guys that are in here for the first time, this is our Holly AI. This is our AI strategy trades window. Sorry, I didn't have this bigger when I started. Let me just go ahead and stretch this out a little bit. And so I notice with that big move in the market, if you look at Holly Grail, one of the strategies is, or was, Sunrise Mover. She had one trade today in Sunrise Mover, and look, it was a stop hit. The very first trade of the day. It did not work. Okay, Weibo, not looking healthy there. Maybe watch that one for a downside move. Let's go to 2.0. Now remember, the market opened up and ripped. What do you see here? We see Sunrise Mover strategy. Let's go to the Sunrise Mover 2.0, and we got no trades in that Sunrise Mover. So what that tells me, guys, is, you know, I think there were a few stocks today leading the market higher, and you don't have to look that far. If you just look at some of your favorite stocks, you know, Apple, you know, up to over 2%, Netflix up over 6%, Facebook had a good day, up 2.5%, Google up 3%. So guys, it was the FANG stocks, it was the Q, but it wasn't all the Qs. All right, the semis weren't doing all that great. Matter of fact, I'm sure Steve's going to talk about the trade of the week. NVIDIA had a great day yesterday in a market that was down, and today it finished lower. And so the point I'm making is a lot of our Holly, some of the best trades in Holly don't come from the ones that every hedge fund and their mother is trading, like your Apples, Googles. You know, you'll find some more obscure stocks in here, but it wasn't, to me, just a broad-based rally, have you? Okay, this was a few major stocks, you know, leading the march higher. You know, I know some of the financials are doing okay as well, but for the most part, it was your Amazons, which I didn't look at. So let's take a look at Amazon, and look at there. That's huge, you know, 3.5% for a $1,600 stock. So there were some big moves today in a certain group of stocks, obviously the tech-heavy FANG stocks. But other than that, as a matter of fact, my Brokerage Plus, I had some short strategies in there, and I'm like, wow, these aren't acting too bad considering the market keeps ripping higher. Those were kind of, you know, going in my favor, or they were just kind of barely out of the money. So it's a strange day. And, you know, I don't think it was a broad base in a sense that, you know, all boats were rising in the tide. It wasn't the case at all. It was a few select big ones. To go over Holly, I mean, she started out, and another thing that got me, we had that big move in the market, and let's look at the first trades of Holly. These couple of shorts here didn't work. Let's go to Holly Grail. You can see here the first few trades did not work, but look how she came out and finished the day pretty respectable. And I'm sorry, that was Holly Grail. But after those three trades, and 2.0 did the same thing. A couple of bad trades, but look at the trades from there on out, not bad at all. And the same thing can go with NEO. Look at there, first two trades, top hits, and then, you know, pretty decent. So out of the gates, yeah, she didn't do too well. I think it was a tough market, just in a sense, once again, that it was some of your major, you know, tech stocks kind of leading the charge, and there wasn't a whole lot of other stuff moving. And look at some of the relative volume. I mean, even these stocks that were up big on the day were doing it on low volume. We talk about the SPYs, you know, moving higher. Look at that, not even 0.70 on relative volume. Qs. So I think same thing, 0.72. I'm not one to say this move doesn't mean anything because there's no volume behind it. No, our friend Brian Shannon always points out price is the only thing that pays. So whether it goes up on zero volume or whether it's all time, it doesn't matter. The closing price is what people look at when they go home and look at their 401ks. But Steve, unless you have, that's about all I have today. I think it was kind of a quirky day as far as what was moving.
Strange days indeed. Most peculiar, mama. Yeah, there wasn't much to glean from the AI today. Low trade count, bifurcation, and again, low volume. You can just see it on Andy's page right there. Look at that NASDAQ rising on low volume shrinking. So that's, you know, we talk about putting stuff in the bullish category and stuff in the bearish category, and that's all we really have to go on at the moment. If things iron out next week and I feel like we have more of a directional bias, I'll be happy to share that. But for now, we're both in kind of agreement here. about 45 years between the two of us of watching price action here. That we're at a crossroads and we need more confirmation.
Exactly.
Let's take it back here. And
as a matter of fact, before you do, Steve, I talked to my brother. Called me. Because I told him to get in about a 50% cash several months ago and saved him a lot of money. And he asked me today, hey, what do you think? And I said, no. I said, be patient, wait, because we've had a nice bounce off bottom. You're kind of chasing now, and I think there'll be a pullback one way or another. Maybe not, but I think you're better safe than sorry in this case.
You get his wish list together and keep an eye on him, huh?
Exactly. Yeah.
All
right.
Okay, so coming back over here. Oh, no, we're not going to make Scott the presenter. He doesn't want that. Here we go.
Oh.
Okay, I'm good.
Are you doing it? Okay.
Yep, I got it.
Okay, good.
So, trade of the week, NVIDIA. Annie and I were kind of talking. Let's just pull up the spider. Look at what we've had to work with here the last 6 weeks. I think we're both kind of rather proud of the fact that there hasn't been too much trouble in this very volatile environment. I mean, we were calling SDSs back here, gold miners, another safe play, cash a couple times. So it hasn't really been too much difficulty in this crazy volatile environment in terms of some bad losers that didn't work out our way. But nonetheless, we came into this weekend. Thank you, Waleed. He likes that opinion. So where I'm going with this is the last 2 weeks, this market has, as I said, sold off 20%. Now, if we are grinding in and settling in and trying to put in a nice base and call this in hindsight a correction, well, probably some of the best stocks to focus on are going to be ones that are pretty solid in terms of fundamental. We don't talk a whole lot about fundamental analysis, but this is probably a good time to bring it in to a particular scan that we use called Let's Go Fishing. So actually the last 2 weeks, both NVIDIA and X US Steel were found on Let's Go Fishing, meaning they're, we'll break that open in a second. We'll get to that. Let's just talk about the trade of the week. NVIDIA came through again on Let's Go Fishing. It's obviously got solid fundamentals. But I want to share a funny story with you. Yesterday, came in and sat down. The first email I got of the day forwarded to me was somebody replying to the trade of the week email that went out, named Michael. I don't know if Michael's here, but if he is, good. Michael wanted to kind of troll me and say, oh, you're picking NVIDIA. Well, they're involved in a lawsuit. Capital, really? I'm putting accent on his words. I don't know how he speaks, but it's funny. It's a great example for me to kind of go back and remind everybody, I don't care what people say. I don't care what CFOs say, especially don't care what analysts say, especially don't care what people with a tie on CNBC have to say. All I care is what the price has to say. So going back to this guy, in which I replied kindly that, well, I appreciate that. You don't have to trade it if you don't like it, but we don't concern ourselves with what people think is going to happen. We concern ourselves with what the price action tells us and what the charts tell us. So here we are. And by the way, here's Mr. Concerned. December 24th is when that news came out regarding Bitcoin and NVIDIA. It's a class action lawsuit. So ever since that lawsuit has come out, the price action has shrugged it off. So I'm not really quite sure what he was talking about. But I felt this was a great example to kind of tie into what I've said before. I get a little heated about it because, there's a lot of noise out there. There's a lot of cross currents. Go read Jesse Livermore, the book called Reminiscence of a Stock Operator, and you'll start to see how the crowd is moving one direction and the other, trying to get the herd to move one direction as they exit and move the other. So somebody talking their book on CNBC saying, we don't like NVIDIA, we're concerned about this lawsuit. They're probably sitting on the damn bid right here, buying as much as they can. So don't concern yourself with what people are talking about. Only concern yourself with what the chart says. So back to our chart here, we had a failure to go to new lows, and then a slight higher low, and then kind of a nice grind higher. This thing has had a 50% haircut, guys. So I'm not really concerned at a stock that fell from $300 down to $150, and now all of a sudden you're starting to throw negative stuff at it. No, it's priced in my opinion, and the price action tells me such. So we're trying to pick safe, long-sighted strategies for the trade of the week. That's the mandate, is to go long, not to try and get people to start short selling things. That's not what we're looking for. But this was a simple pick based on the fundamentals, based on the fact that the market was trying to settle in and move higher. And in case this thing could break out from its, pretty much that green line was the congestion that the entry was called. It's in no harm, no foul land right now. I mean, it basically closed right at the entry price today. So it's a zero-sum game at the moment on that one, or a zero net change, I mean, at the moment. Let's see what the market brings. The only concern I have is this declining 50-day moving average. But again, NVIDIA is going to do what the general market does. If the general market rolls over and starts to just give it up horribly, well, then this trade could easily fall apart. If the market wants to dig in, and we look back, like I said, hindsight being 2020, and we all say, wow, that was a great correction, I should have been buying. Well, shoulda, coulda, woulda. We can look back in NVIDIA and say that was a pretty good entry. And if that's the case, I have a feeling this thing could be a decent hold. But I'm not going to get into that game. I'm just trying to look for swing trade opportunities. I think this gap could be filled up here at 200, and then any short sells like inverse ETFs and things like that. These things are just getting smashed, the SDSs. So we're looking for things that are trying to remain constructive. Coming back to X, last week I said we discussed the most likely and perfect scenario for X would be to work off that big green candle that the following day entry price came on and go sideways. Sideways action would be constructive. Well, we did get that. Got a bit more of a bigger seller today than I really wanted, especially after going up and tickling that green line, looking like it wanted to do something yesterday, and then pulling back. So this thing is just lurching back and forth, looking for a reason. I would have liked to have seen a little stronger close today, but this moving average coming up here to meet the sideways action, we could see an interesting day tomorrow of constructive action. Typically what I'm seeing is these moving averages, like holding a bird in your hand softly, and ideally we can lean on that moving average, and if it's going to go, it should go, I think, in my opinion, the next day or two. If it starts to bleed back down and close below these moving averages, then the trade's probably going to be off. But again, it's also predicated on what the major market is most likely to do there. All right, so those are the two, NVIDIA and X, the only two things that are open. NVIDIA could give a little bit back, maybe come down to this level right here. It wouldn't be surprising to see it give a little bit more back just to regather some strength and then hopefully move higher. But again, 50% haircut on a stock that people are concerned about news, but the price action is shrugging off the news. And like Andy pointed out yesterday, it was a great day. It was extremely strong, but the market was weak yesterday, maybe got ahead of itself a little bit. So that's the nature of swing trading. It's not all in the moment. It's a grind back and forth. You just want to set your risk parameters and let them go. All right, anything else you want to add on those two, Andy?
No, Steve, I think you covered them very well. They're both definitely still in play. So,
So here we are. Yeah, so here we are in the market where we've sold off, we've bounced, and now we're grinding sideways. That's the major theme of what's out there. When was the last time, Andy, you saw this many things in the trend change lubricant?
Wow. Yeah.
Yeah. This is exactly what this scan is set up to look for. I mean, there were days last week when I had nothing, but now everything. So I'm going to talk a little bit about these two scans. I'll come back to that one. The first one is an alert window that Andy created. Like, let's go fishing. It's where X and NVIDIA came through last respective Fridays going into the weekends, and we found stocks that are basing with good earnings, or good solid fundamentals. Let's take a look under the hood. And I'll certainly share this in the window if people want it. So we're stocks making new highs. There's our event. Okay, pretty simple. Price earnings ratio can't be more than a 30 ratio on the filter that we use for price earnings. Okay, position in the yearly range. Okay, here's a big one. This is what constitutes these downward beaten stocks on the daily chart that are in a downtrend, but slowly, hopefully, basing and turning and trying to break the downtrend. Position and range. Whenever you see position and range, you take the time frame. In this case, it's a year. So we count back 52 weeks, identify the 52-week low and assign that a 0. Identify the 52-week high and assign that 100. And what Andy's done here is he's capped it. He's maximized it at 35%, which, by the way, is the same for the second scan we'll get into in a second. So it's only showing us stocks that are no more than 35% above their 52-week low. So they're 65% off highs. They've taken a pretty good drubbing over the last 52 weeks. Do you want to add something, or is that just a big sigh?
No.
Okay.
Just a big sigh.
Cash, another fundamental data point that Andy felt was a good floor. The cash debt ratio, earnings per share, got to be making money. You know, if stocks are in a downtrend and they're not making money, we're not interested. But these are stocks that have, you know, the blooms come off the rose a little bit, but they're still showing some fundamental wherewithal. Price minimum, and then the position again, 10-day range. Take the 10-day range. 0 is the 10-day low. 100 is the 10-day high, and we are close to breaking out at 98 percentile of a 10-day range. So that's where we get that nice bottoming action and looking for a nice smooth 10-day saucer bottom, whatever you want to call it, and then your average daily. So the real key is here we're mixing technicals and fundamentals. The technicals are being beat up on the daily, but also in the last 10 days are showing a lot of strength, but just so happen to have earnings, revenues, money, not too much debt, etc. So that's the Let's Go Fishing scan. And for anybody who finds value, this is the time right now, not when the market's making 52-week highs, guys. This is the time where you want to use these kind of scans, where the market is based and trying to maybe put in another leg higher. So we'll see if we can make these work in our favor. So I'm going to copy the first one, and I will put that in the chat. Let's go fishing, paste. Now the second one is kind of the same thing, but a little different twist in what we're looking for. Instead of, well, first off, it's a top list, so it's different. It's not making new highs. We're refreshing every 30 seconds, and all we have is a set of filters here. But in this case, let me show you, we're kind of doing the same thing. Look at this position in year, 35%. Can't be more than 35% off your low. It's got to be beaten up for the year. And look, we did the same thing down here. Position in 20-day range. I've got this one set at 90. So we're still looking for a healthy 10 or 20-day range. Looks like we're using 20 on this one. But here's where the difference is. Instead of this one, like Let's Go Fishing, looking for stocks with those type of technical charts, but the fundamental strength being the secret sauce in this one is using the sort function on the short float percentage. So what's being sorted here? Let's take a look. AXDX, well, wow, that's a decent looking chart. Going sideways, looking for a move higher. If this thing breaks out of this downward range, I'll put just a horizontal line right there. If these sellers get taken out back here, the short sellers who were happy down here 2 weeks ago are starting to get nervous. And when you've got 51% of a stock that only has 28 million in the float, this thing right here is a recipe for what we would call a trend reversal short squeeze. And you got everybody running from one side of the lifeboat to another, and that is significant with only 28,000 shares. This is our little secret sauce. Again, Let's Go Fishing is looking for high, good fundamentals. Well, we'll take anything we can down here, but we like the ones that are near the top because 51% short the float. Look at this thing. This is just juicy as well. I mean, we can come in here all day long and just start setting up some nice price alerts. I'm setting horizontal lines, not price alerts. But knowing that if these things get through, they've got some giddy up because the short sellers might be caught on their heels, okay? And this is what we call the trend change lubricant. And I've never seen this thing, I shouldn't say never, I've been a long time since I've seen this thing filled up to the brim, because that's exactly where we are in the market right now, guys, looking for this kind of stuff. So the beauty, going back to man and machine, the machine is returning all this stuff to me saying, hey, Steve, all these charts kind of look like what you want. But the beauty is I can double click and sort and find the gems at the top that have high short floats and focus on these and use price alerts to send those out. So I will copy and anticipate the request for this one as well for people who haven't seen this one in a while. I just call it the TCL. It's in the chat window and there now as well for you. So just a quick little, go ahead, you got something to say?
Well, I was just going to say, in either one of these alert or top lists, with either one of these windows, guys, if you're trading these, okay, keep in mind that in the big picture, they are still in a downtrend. So when these things do not work, you really need to exit quick, because more than likely they're either going to work or they're going to go right back into their sloppy downtrend that they were in. So anytime I trade these, I keep the stop very tight, because, like I said, they're either going to work or they're not. And if they're not, it could be a while before they see that price again. So just, Just keep it if you do trade these. In other words, let's go fishing. It's not going to backtest very well. But if you catch the right stock in that, you can do very well because it could be a long-term play.
Let's see. I sent this to my buddy John. He might be in the room today, but boy, you want to keep things simple. This is about as simple as I can keep it. In the first half of the day, we have something. This is just the NASDAQ, guys. Blasts off on the open, and it's got nowhere to go. It runs out of steam, and it goes sideways. The sideways works just as good in the intraday 15-minute charts as it does on the daily stuff I was talking to you about. And look at what brought up the action. I mean, I'm showing this to Andy in real time. I was just watching this. I said, boy, you know, as soon as this moving average catches up to it, it's going to do what it does. And it gave about 45 minutes of alpha. And then I always say towards the middle of the day and the rest of the day, everything gets kind of slop. So as far as I'm concerned, you know, the first half an hour is not much to be messed with. But, you know, there's your sweet spot of the day right there. And that's just the NASDAQ. I mean, I could pull up the trend change. I'm sorry, the multi-strategy window called Extreme Volume High-Low Pro, and all day long, you guys probably remember, I did a webinar about 5-6 weeks ago that said if something came from the heavens and said, Steve, you need to now go back to being a day trader, what process would I use, what methodology would I use? I would use that momentum indicator, Extreme High-Low Pro, all day long, looking for things that exploded on the open, going sideways, and just waiting for that moving average to catch it in the first couple hours of the day. So a lot of alpha that can be made off of this setup right there on many different stocks. So I didn't want to forget to imprint once again on you guys that if you want to keep it simple, it's about one of the simplest ways to do it. Some stuff coming in here. Is there a way to use that filter to be set up to only show stocks where a 13-hour SMA has crossed? See, we got too many SMAs. Our library has the 8, the 20, the 50, and the 200. So we're pretty much stuck with those, Tim. You can add whatever indicators you want on your chart by right-clicking and going to indicators, and you'll see we do have EMA, SMA, and you can plug in whatever you want. But when it comes to the actual filters that scan the market in real time, it's more in-depth than you realize. We can't just pop them out like, you know, Tic Tacs. They take a while to develop. All right, was there another one? Do you ever want to have moving averages cross up or down to signal? No, Waleed, this is about as simple as I can make it. Momentum to the upside, moving average coming up, bringing up the rear. Sideways action is what I want most, because that is something that I can, and over my experience, I can lean on taking an entry right there without waiting for this confirmation. That's the big ticket, the big difference. For the people who are waiting for the breakout, you know, they've lost all of this. I'm comfortable, I'm saying I'm comfortable enough leaning on this moving average as it comes up to meet the sideways price. And that's just about as simple as I can ever want to keep it.
Now, Wally, to get back to you, maybe on a daily, sometimes I like to see that. I like to see like the 10 crossing over the 20, you know, if the price is near, you know, just above that 10, that sometimes can be a catapulting action. But Steve's right, yeah, on the intraday, I like to keep it simple as to, you know, simple.
What I thought we would do next is take a trip down the old sector lane because, you know, the last time we did this, everything was just in a death spiral. So everything is kind of now recovering, and some things look better than others. Again, most of the stuff in here as we go through is probably going to look similar unless we find some anomalies. But there's the airlines just sitting quietly, waiting for a possible move. I could see a move coming from this. I really could. Mm-hmm. Oil has been trapped under that orange pivot line for a while. We'll see what happens there. There's our Qs. The biotech looks pretty good. I mean, biotech is above all three, 10, 20, 50. Biotech only has yet left over to deal with this 200-day moving average. This is pretty strong right here. This biotech average, it looks like it's kind of leading the way from some of these others at first glance here. And the XLV, also kind of unusual. It just took out its 200, but it still has its 50-day above it, kind of an odd case. But the healthcare ETF doesn't look bad either. It's getting its little start today. There's technology. It's going to look like the NASDAQ. Chinese stocks, just kind of wallowing down here. I'd probably stay away from those. There's our spiders. Looks decent. Okay, now Andy pointed this out to me. Financials are looking really good. Look at this. I had a pivot line in here, and the regional banks have been sliding on the high end with support of its pivot line, and now it's starting to creep higher. The financials are actually starting to do something. There's your real estate, more financials in the XLF. Beautiful. Look at that moving average. There's a perfect example of the daily moving average. Boom, off the bottom, sideways, 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 and here comes the 10 SMA. And there's your inflection point right there. Financials and banks are looking strong. Healthcare is looking strong, like they got a shot anyway. There's the brokers. They're going to kind of mirror the financials. Oil services, we'll see how that resolves. IW, and we looked at that. Okay, this is going to be the national banks. They're going to be financials again. We looked at Dow, agriculture, energy, not doing a whole lot. So I think the big takeaway here is those financials and those healthcare stocks look pretty good. Look at what happened here. Here's also an interesting point. Last week, guys, I'm going to go back here. Perfect. Last week, when we were in the depths of stocks going to lows and the volatility was high, look at the treasury market on the daily chart. Moving averages fanned out, caught the kind of sideways action, a little bit of pullback, but forced the action higher. This was a defensive play. So once we scroll back forward, that defensive play has now eroded. We pulled back and just bled back down through these moving averages. This thing is now broken, which could, again, make a point for the bulls that say, that's right. Hell yeah, people are jumping back into stocks. That's why. So we can, talk about all the stories we want, but again, another example of how the moving average, how the price action and the footprints of the sand, they tell the story, not what some clown on CNBC with a tie is telling us. A couple more here, silver and gold, same thing. They're starting to kind of fall apart where they were strong. Gold miners are pulling back. So these are all kind of possible hints and tells that these defensive ideas here had a pretty bad day today, and they're starting to break down also on the daily chart. So just another little piece of the puzzle, guys. All right, with that said, I think we've got time for a few chart requests. I didn't announce it earlier, but if somebody wants to look, we can take a look at 3 or 4. And it always helps if you put a symbol out there. If you tell us if you're long or short, or you're thinking about getting long or short, we can put a second pair of eyes on that and try and help you out. If not, then we are out of content. But if you guys got a symbol you want to look at, we can always end with that. I'll take a sip of coffee while I wait.
Grow.
Surprised nobody wants to talk about. I'll get to that in a second. Matter of fact, I want to get to this real quick. MBOT, everybody's favorite today. You guys have heard me talk about the day and a half theory? Well, there it is in all its splendor and glory. The old day and a half. Yesterday, big day. Today, follow through from yesterday's big day. When did we lose control? Midday. There's your day and a half. And the reason I bring this up is there was a smart guy in our 201 class today, and he was watching this thing, he was stalking this thing, and he wanted to know, hey Steve, how do I set a price alert that tells me when 1651 triggers? And there's the price alert. And I'll be damned, I said in real time, I said, I see you working over there, Carlos. I like what you're doing. You've waited for a day and a half. You're watching the intraday. Here's where we lost the momentum right here on this thing. Right? The thing closed below, and now we're chopping below this moving average. We're starting to roll over. Well, gave us a nice sideways action. As soon as that hour and a half of sideways action broke down, Carlos, if you're out there, you had a great eye today in 201. That was the moment to try and grab this thing to the short side, if you could get the shares, of course. So I wanted to not forget that. Day and a half, all day long. It just seems to be human nature. Get a good day, you take it into the next day, you're waiting, you want to be the first one to jump, and the music stops, and you want to get out with a good profit. It's really hard for some of these momentum stocks to hold something longer than 2 days.
Let me add something to that, Steve. Put up the 15-minute chart again. And guys, when you're looking, I mean, it's very tempting. And some of actually, I'm not going to say some, the best traders I know, they short junk stocks like this. But you have to have some reason and some logic. You don't do it just because you think the stock's gone too far and you're going to short it. And trust me, I see so many people get blown up by doing that. And if you're looking at a 15-minute chart, and I would highly recommend a 15-minute versus a 5, look what happened after the first 15-minute bar reversal today. That would be that first midday, that first right there, Steve. Oh, you had it. Yep, that's it. Okay, all day long, if you're sitting there shorting that thing, it was in a trend in the 15-minute chart. But as soon as it broke, now this is not always going to happen, obviously, but at least you have a reason. Michael Noss, I think, shorted it on that 15-minute bar today, and when you do, you tell yourself, okay, I'm shorting it here. If it takes out the high of this bar, I'm getting out, or goes through highs of the day, whatever reason. Set a stop and stick to it. But have a reason technically to enter a trade. Do not just enter, don't just fade strength just because you think it's gone up too far. Have a technical reason and then adhere to your stop. Okay, it's very easy to pull it and say, no, this is going to come down at some point. Next thing you know, you're pulling your hair out and you're blowing up your account. But anyway, I thought that was important.
Yeah, those guys are a unique breed. They will short, and then they will short again, and they will short again, and they will keep shorting until they're right. And what will happen is they will either blow up, or they will be wrong, or they'll be right. It's not the kind of game I want to play.
No.
All right, so let's get to a few. I think we have a few. Thank you so much. Grow was the first one to come through. Whoops, let's go back to a daily chart. Okay, not bad, but we're probably going to see a lot of these. Nice sideways action in Grow. And this is, okay, U.S. Global Investors. So it's part of the financials, right? Investment advice, which is that IAI ETF we looked at earlier. Okay, the backdrop's pretty solid there. So,
I mean, it is a $1.25 stock, which scares the hell out of me.
It got a little sloppy here the last couple of days. It is a $1.25 stock for a reason. So, I mean, you could set an alert, and if it breaks above that alert, and the relative volume is strong above 1.5, you could take a shot. I don't know if you're already in it. I wouldn't want to see another close back down below this blue line, this 50-day moving average. You know, this thing should really, it could test at midday, but it really should stay above that on the close, in my opinion. All right, let's see. Grow, HIPH. Another, you're killing me. 4-cent stock. Yeah.
Nice day today.
If it had closed on highs, I would have said day and a half, and maybe tomorrow at 12 cents you could get out. I don't know. I try to stay away from these, and whatever I have to say probably is not going to be good advice anyhow. So I saw GE, Dave. I tweeted in December, GE is probably going to be a great new year acquisition from the institutions. That thing's had enough, and so far it looks great. I like GE. You can see I've already got my line in there, David, so I'm going to know if GE does break above this consolidation. It looks pretty good. I like that. Mark, M-A-R-K for Chris. Another dollar stock, been in a downtrend. Nothing really to write home about. If this thing comes and explodes out of this range on good volume, it could be interesting, but very narrow ranges going sideways. It's got a shot, but nothing really compelling. You guys got to give me some stuff over $5.
Did you get Adobe yet?
No, is that the next one?
Yeah.
Okay, Adobe had a nice day today.
Yeah.
Nice day today. It's going to run right smack into this 200-day. But it is constructive. A nice failed double down here. How'd you like to be the person who's waiting for the herd to be short down here? This is what happens when you short this kind of setup. Typically it doesn't work. Sometimes it does, but more often than not, you're asking for a bounce into oblivion. They're going to catch you, and you want to reset up here. But it doesn't look bad. It's going to run into some resistance there at the 200 for sure. HCLP, going through a few more here.
Oil play.
Another oil play, but in a horrible downtrend. I'm not really seeing much there. It tried to fill the gap. It did fill the gap, and now it's just kind of wallowing. A couple more. EIDO. I know I skipped a couple. Oh, this one's been having some relative strength. What the hell is this? Oh, this is an Indonesian emerging market. So emerging market, hanging in there, looking strong. Indonesia does not seem to care about what we're doing over here. It's not a bad looking chart. I would not want to see it close below that moving average right there.
Maybe GIS. I know you had three of them.
Yeah, I was gonna skip back to that one. So we'll do a couple here real quick. Somebody did. Oops. That looks good. General Mills. People got to eat. Looks good to me. Doesn't look bad at all. It's hanging in there nicely. And I think you also did Campbell Soup, didn't you? You're a real Warren Buffett kind of guy. CPB. Not bad.
A lot of them looks like the market. You know?
Just what I was going to say, exactly.
Mm-hmm.
KHC, that's nice. I like how it's coming out of this sideways action. That's nice.
Mm-hmm.
Heinz. One more. We'll do two more, then we're done. TPX and KHC. So TPX, and then we'll bring in Scott. Not bad. You can see a nice sideways being supported by that 50. Again, all these charts look the same. You could even probably make kind of a case. You got the cup and handle thing going on there. Looks good. A close above that price, that moving average would be welcome for sure. But it's all going to depend on what the general market's doing for sure. The last one before we bring Scott in is KHC, and this one looks pretty good too. I like how it's cupping here and then starting like a bird, starting to fly out of the hand. Mm-hmm. We did Kraft Heinz already. Okay. I knew that chart looked familiar. All right, guys. Well, we are done on the Trade of the Week content for this week. A couple minutes to the top of the hour, and I'm pretty much talked out. So let's bring in Scott, and he's got some coupon codes and some announcements he can make.
Yeah, thank you. A couple items on the way out. Let's make sure everyone has a subscription to our podcast. We got a new episode coming out, probably not this week, actually, because we have a company meeting for the year on Friday, so we will probably skip on updating us this Friday. But who knows? We might be able to put in a guest podcast, so keep tuned for that. But just make sure you're subscribed to the Trade Ideas Podcast by typing in Trade Ideas Podcast into your favorite podcast app and clicking on subscribe, and then let's see what happens. We did have a new episode out last week. There's a great ebook we put out just about a year ago. We're about due for an update, but it is still super relevant, so make sure you get your free copy. Go to trade-ideas.com/ebook, plug in your email address, and get the download link delivered to you. It is 5 strategies to help you win in a post-BTFD market. Both Steve and Andy contributed chapters, very timely upon the release, and it has proven so all year long. There's a 15% discount off any subscription for the first month or year. Use Get Started, all caps, to get going. You can also use this code to do an upgrade from standard to premium. So don't sleep on that if you want to go ahead and get the premium features right now and you're a standard subscriber. It's good this month. Any questions, just shoot us an email, info@trade-ideas.com, or follow Steve on Twitter @TodayTrader. We also have @TradeIdeas, and our Facebook page is Trade Ideas Pro. So like us there and get the updates we post, and then share them with your friends. Again, info@trade-ideas.com is the best place to send your questions. Thanks, everyone. Thank you, Steve. Thank you, Andy. See you guys.
All right. All right.
See you. Thanks, everybody. We'll see you next week.
Later on.